Thank you very much for being here, and now your host. He's been practicing his guitar at least 5 hours a week for the last 2 years, but he's still crappy. Kurt Nilsen.
Hey there, Kurt Nilsen here with Sunrise Mortgage Group, and I help people get financing for their homes. Before you leave, be sure and check out the links below this video for all the different ways that I can help you now. So today's topic is mortgage insurance. What is it? When do you need it, and why? So mortgage insurance, or MI as it's often known, is a confusing subject to many people. So allow me to explain it. Often people think that mortgage insurance protects them, the borrower, meaning they believe that they pay a mortgage insurance premium, and if, God forbid, something happens and they can't pay the mortgage, they lose their job or become disabled, then they are covered. Now, I know that there's some certain policies that you can check into with your current insurance provider that can protect you from that situation, but this isn't one of them in this circumstance. In the lending world, the borrower or home buyer pays the mortgage insurance premiums, but the lender is the beneficiary. Mortgage insurance protects the lender against default by the borrower. So if a borrower stops paying on a mortgage, the mortgage insurance company that you pay ensures that the lender will be paid in full. So when do you need mortgage insurance? Well, if your down payment is less than 20% of the sales price, mortgage insurance is typically required. The cost and types of mortgage insurance varies depending on the type of the loan, the size of the down payment, and the credit score. Again, depending on credit score, amount of the down payment, and the loan type, mortgage insurance premiums typically cost between 0.3% and 2% of the loan amount divided by 12. What I mean by that is if we had a 1% mortgage insurance factor, the monthly payment would be $167 a month. The formula for that is you take your loan amount, in this case $200,000, times 1%, the mortgage insurance factor, and that equals $2,000. Then you divide that $2,000 by 12 months, and that gives you your monthly payment of $167 per month. Now, with some loans, the mortgage insurance premium stays on the loan for life, and on other loans, you can eliminate the mortgage insurance after some time and when a certain amount of equity in the house has been achieved. With certain loans, you also have the option for lender-paid mortgage insurance. Lender-paid mortgage insurance can be secured by paying a higher rate and/or higher closing costs. I'm not a real big fan of the lender-paid mortgage insurance unless you plan on being in the house for a short period of time. The reason for that is you'll probably pay a higher than market interest rate to the lender-paid mortgage insurance, and you don't want to pay a higher rate, unnecessarily if you plan on living in the house for quite a while. So, it's kind of beyond the scope of this short video to cover every situation. There are a lot of variables, but check with your mortgage professional or give me a call and we can chat about some of the different options for you. So that's my quick rundown on mortgage insurance. And, I understand how important this home buying process is to you, and I really care that you have a great stress-free experience. I know I can guide you through the home buying and lending process so you feel knowledgeable, confident, and clear with all your options. So don't settle for anything less. There's no cost or obligation to talk, and I'm pretty easy to reach. So if you have any questions, or if you or any of your friends or family would like to chat about getting a home loan, I'm just a phone call or an email away. Thanks a lot. I really appreciate your time.